Okay, now that we've talked about journals and journalizing our transactions, let's talk about the next step in the accounting process, which is actually to post those entries from our journal into our ledger. And a ledger is just where we keep all of our individual accounts. So every different account that the company has, meaning all the asset accounts, all the liability accounts, and all the equity accounts, will be kept in the ledger, and every transaction that impacts one of those accounts will be recorded in the ledger. So for example, say a company has four kinds of assets: equipment, land, supplies, and cash. Every time we have a transaction that impacts one of these different accounts, it will be copied from the journal into the ledger, so we can keep track of what is happening to that individual account. Or for example, maybe we have a transaction that impacts salaries payable. That's going to be copied, or posted is what we call it, into the ledger from the journal, so we can keep track of all the transactions that impact salaries payable. And each company is going to have what's called a chart of accounts. So they will have a listing of all the different accounts that they use within their business. So every transaction will need to be fit into one of those different account titles. And you can see it's by assets are listed first, then liabilities, then our owner's equity accounts, common stock, dividends. We get our revenue and expense accounts then in it as well. So let's look at what the posting process actually looks like. So we start here with a journal entry. Let's say we debited cash and credited common stock because we had an investment in the business. So that debit, that $15,000 debit to cash, needs to get posted into the ledger. So we'll go to the ledger and we'll find the cash account, and we will basically copy, it's called posting, the information into the ledger. So we copy the date down. There is a space for an explanation. We'll leave that blank. It's reserved for special types of journal entries like adjustments and closing entries. Then we'll copy or post that $15,000 down. So I'll just show you. We don't have to think a lot here because we're just posting it from one to the other into the ledger. And then we'll calculate a new balance here. Now the next step in this process, you can kind of see the general journal has a page number. All of them do. This one happens to be page 1, J1. So we take that and we write it into the reference column of our ledger. This is important because now if we have a question about this particular transaction, we know where to go back to look, which page of the journal it's going to be located on, so we can go back and find it. Let's continue on and finish the rest of the posting process here. The next thing we have to do is, you see all of the accounts have an account number, and this particular one, cash, has account number 10. And what we're going to do is we're going to write that in the reference column on our general journal page. And that tells us a couple of things. One, what account it actually got posted to. If there was a question, we could look at that. The other thing it's going to tell us is this transaction or this particular entry has been posted into the ledger. So if you think about maybe you're sick a day, someone would know where you left off based on what's not been recorded yet in that reference column. Then we'll go ahead and we'll do the same thing for the credit, which is common stock. We'll go and find the common stock ledger account. We're going to record the date and carry that down. Take the credit and we'll record it as a credit, the same amount in our common stock. Calculate a new balance. Again, don't forget we need to take that page number and we're going to go ahead and write it in that reference column on our ledger. Then we will take the account number and write that in the general journal, and then we're done. So it's very easy to make a mistake here. It's not very difficult. Again, we're just copying. It is called posting though. Don't say, well, my teacher told me it was copying. It's technically called posting, so we need to make sure we're posting from the journal into the ledger. But very simple process. We've already done the hard work putting together the journal entry. We just have to find those ledger accounts and go ahead and copy it over. I want to give you a couple more examples of what the posting process might actually look like. So the ledger that I showed you before is more typical of a traditional ledger. So this, what we see here, These are pretty close to what a real ledger might look like that's actually used in business. Now there's another way that we can do a ledger, and that's using a T account. If you remember, that was a very simplified version of how to handle transactions and a way to figure out what's going on with a particular account. So a lot of times we will just use these T accounts because they are simpler to create. So here's an example. We had a debit to cash, a credit to common stock for $10,000. Once we did that journal entry, we would do just what they're doing here. We would find the cash account in our ledger, and we would go ahead and carry down that amount into our ledger for $10,000. That would be a debit. It's on the left side. And then we had a credit to common stock. We find the common stock ledger account, and we carry that down as a credit, which is on the right side. Then we would, and you can see here what they've done, you take the account number, carry that up, and write it into the reference column for both of those. And it doesn't look like we have a page number on our journal. Let me show you one more. Here we purchased office equipment, this time costing $5,000. So we debited office equipment, and we credited notes payable. Apparently we didn't pay cash. We got a loan for that, or we're going to pay for it a little bit later on. So go ahead, find the office equipment ledger account, happens to be number 157. Take the debit, write it into our ledger. Then we have notes payable, $5,000 credit, find the notes payable account, copy that down. And then lastly, we have to take those account numbers, carry them up, and write them into the reference column. So we would do this for every single transaction that we've recorded into our journal. And ultimately, we will get to the point where we have to prepare a trial balance. So I'll talk about that in the next presentation. Thank you.